When you're looking at making financial decisions, you have to understand the economy. You have to understand politically what things are doing and just kind of be aware. And Bank of Canada currently is looking to reduce their interest rates, I suspect, by probably at least another 50 basis points. You always want to look at the direction that things are going. Obviously, the things that the Bank of Canada look at, inflation, unemployment, productivity, Canada is struggling. And so that they're trying to stimulate the economy. And so they're looking at ways that they can do that. Obviously, interest rates is one of the things that they can control. So they are looking at reducing those again. So about last month, I had a client, and of course, they were a little nervous because it was time to renew the mortgage. So something I thought I could share with everybody today. If you are in the, looking now or in the near future to renew your mortgage, sometimes it makes sense to maybe just hold off and maybe stay in a variable, which yes, you will pay a little bit more in the short term on a month-by-month basis to note the fact that interest rates are probably going to come down, mortgage rates are going to come down. So I'll just share this little story. Last month I had a client and they were paying 2.6%. And I think their mortgage company came back with a 5-year fixed renewal rate of 5.4%. And this was like mid-September. And I'm like, I knew we were going to have an interest rate correction at the end of September. I knew and I'm still pretty confident we are going to have an interest rate correction here again. I think significant, like 50 basis points. They're even talking now maybe 75 basis points. And I think we're going to see another one potentially December and or very early in the new year. So I had suggested we just lock in, we wait to just a 6-month open variable. I mean, that means we can, lock into a fixed term anytime we want, keeps everything completely flexible. They didn't like the interest rate, neither did I. It was up, north of 7%, but it is short term. So again, short term, we're going to pay a little bit more here month by month for the next maybe 2, 3, 4, potentially as many as 6 months. We're going to watch what interest rates do and what the Bank of Canada is doing, what the mortgage companies are doing in response to that. The reality is we are going to save tens of thousands of dollars over the long term here of another fixed 5-year term. On average, as it all averages out. So when you're looking at making financial decisions, run some numbers, right? I ran the numbers. Yes, I can save tens of thousands of dollars by delaying making the decision. If I can get, us down into those anywhere in the 3s, I'd be happy. So, when you're making those decisions, even on, whether you're buying a car or, right now you've got 0% financing, does it make sense? Do I, use their 0% financing and pay it down and keep my own money and put it to work somewhere else? Or do I just pay for something in cash, for example? So these are always things that I'm having conversations with my clients. This was an easy one I thought I could share about mortgage rates. I think they are going to come down. I think they're going to come down here for a couple of months consecutive. And if you are in the business of renewing now or in the future, hopefully you found this helpful. So I will leave things there. God bless you all. Thanks for listening. Please do like, please do share, please do leave me your comments. And if there's topics that you'd like to hear me speak of economically, please do let me know. Put them in the comments and we'll do our best to get to them for you. Cheers.